3 years ago, I discovered the stock market. Ever since then, I've been studying everything I can get my hands on as far as economics and trading goes. It's basically become my dream to become a professional day trader. I scraped together a little bit of money to help get me started. You can see that balance over here. There it is. This week we're starting out with about $700. Unfortunately, that is not big enough of a balance in order to become a professional day trader. How much more do you think I need in order to become a professional day trader? Well, given that the minimum wage in this country is $15 an hour, take $15 an hour, 40 hours a week, times 52 weeks a year, and you get $31,200 a year in salary. So if I want to be a professional trader at the minimum, I have to beat that number right there. Now, there's 252 trading days a year. So you take 31,000 divided by 200 divided by 252 trading days a year, and it's going to give me a total of about $125 a day. Now, I write about this and talk about it here in my journal, the Russell Journal. I'm Russell, and this is my journal entry for today, Monday, August 31st, 2022. Happy Halloween, everybody. So, how did I do today? You can see from there that I am negative on this balance, and rightfully so. It was definitely a choppy day in the market. Now, I yesterday was fairly well correct in my assessment that coming into the morning we would be down. What I was hoping for throughout the rest of the day is that we would rebound into the afternoon. Now, some of it is not as bad as you really think it is. So coming into the SPY, okay, looking at the SPY, you can see that our trend is still up. Trend is still here. Our trend is up. You can see that our bias is up, and you can see that our momentum is also up, okay? And the one thing that's interesting about momentum here is that it is embedded, okay? This means that the professional traders will basically be buying the breaks on this, targeting the upper Bollinger Band until this loses the embedded reading. Once that embedded reading goes away, then it's a whole different ballgame. Okay. As of right now, we have one trade on that is going to be held for hopefully a long period of time. Okay. We're going to go into this trade. This is the trade. I think this is going to be the trade that defines my year, personally. It's been one that I've been looking for and eyeing for pretty much the last 3 to 4 months. I've been looking for this trade. And so I'm pretty excited about it. So what I want you to see on the monthly chart is the trend is down. Okay. You can see here the trend is down. You can see that the bias is down. We are under the 18-month moving average, okay? The two things I want you to see here, though, are, first of all, this right here. See this? See this big green candle right here? That's this month. Now, follow me down. See that? That's the slow stochastic. Momentum is oversold, but that candle is green. What does that mean? That means tomorrow, when we get the new reading on the monthly slow stochastic, this is going to have come out of oversold, which is going to give us a price target of the 18-month moving average here, right around 417. Now, one of the things that's really cool, okay, that's very exciting, Morgan Stanley and Goldman Sachs both made reports today saying that this could see a run to 415 or 416, okay? So I have two of the smartest banks backing up my idea. I've got this backing up my idea, and I've got proof from back-tested charts before this that this is where you're headed, okay? That's where you're going. Now, what I did 2 weeks from today, I bought a call. $400 strike price, because that's what I could afford, okay? And we're going to try and hold this. Now, the good news is this only took about half of like my buying power. So what we will do as we go through this is we're going to put together one of the things I've called the infinity trade that I'm working to perfect this concept called the infinity trade, where you have a long call position or a long short position, long put position, and you hedge the other side against it, okay? So when you get the pullbacks, instead of being afraid that you're going to lose all your money, we start to scalp. We can scalp off of this call position, okay? Now, how will I know that I am wrong, okay? The way I know I am wrong, and this is where we got to go to the weekly chart. Here's the resistance right here at the 18-week moving average. If we wake up tomorrow and we have not either gapped up over that average, right? If we have not gapped up over that average, or at least come to it and tested it as resistance one more time, I will know that I am wrong and I will take off that position over there, okay? Now, the other way, there's one other thing that will tell us that we are wrong. The other way we will know we are wrong on this trade is if this slow stochastic loses its embedded reading. If that happens, odds favor a move back to the 18-day moving average, okay? Right now we're playing for the 18-month, okay? Now, above us, again, the 18-week moving average, which is stiff resistance. The next one is this upper Bollinger Band on the daily. You're going to have to gather some serious momentum to get up over that. That's part of the reason why this is 2 weeks out, okay? The expiration on it's 2 weeks out. I am expecting that we are going to meet some stiff resistance against that upper Bollinger Band and against that 18-week moving average. But I am expecting, because of the slow stochastic on the monthly time frame, I am expecting a break above, or at least a test above that, right? If we fail to hold above that 18-week moving average, then it's a no-go. The trade will be off. But in the event that it works, yeah. So I will have in one single trade probably hit my whole quarter. So I'm pretty excited. I'm pretty happy. Again, it could not work. I could be wrong. So now, that being said, let's go ahead and talk about a little bit of what's going on in the news. A lot of what we have going on today is all Russia, little North Korea, nothing really from China today so far. Really, it's all pretty melancholy, okay? Now, the other thing, how in these economic conditions would that move to 417 happen? Why would anybody do that? And the answer goes back to some of the stuff that we have talked about on this channel. There are multiple market participants, okay? Some of them are the huge fund managers managing billions and billions of leveraged money. In the event that the Fed is slightly dovish or gives any indication that they are going to slow those rate hikes, those guys will finally have permission to come in and balance those portfolios against the current PE ratios. The second group of guys who are interested in buying this market right now are the corporate interests, and they have to buy. One, their buying blackout period is ending. It's coming to an end. As a matter of fact, it really kicks off starting tomorrow, which is another reason why I'm believing we have that gap upcoming. And thirdly, they have an obligation to the shareholders to defend the share prices. Okay, so you're looking for a chance that that you have now. You have three things going for you. You've got funds that are probably going to be buying in the event that it looks like interest rates are going to stabilize, okay? 2, corporate guys buying back. 3, you have an embedded slow stochastic, which means guys like me, traders, as a rule, will be buying the breaks. Okay? We will be trying to buy and get back up to these upper Bollinger Bands. There will be upward pressure on it. Now, I'm going to give you a fourth reason why these guys are this is probably going to happen. See, about 2 weeks ago, Goldman Sachs, Nomura, Morgan Stanley, and TD Securities all went short down through this mess. This thing down here, this was all those big guys trying to be smart, shorting in the hole. Guess who is going to be underwater? Guess who's already underwater on these positions? Guess who's, gonna need to cover? Ooh, investment bankers say not gonna be a good Christmas for investment bankers, just so you know. Okay? Now, economic conditions are rough. Things are bad. Okay? If you ask me in the long run if I'm bullish on the economy, I'm not. Right? We have a lot of stuff to get through. If I had a bull thesis, aside from just a trade thesis, which is this is not, I think the economy is doing really hot and in great shape. None of that is that. Okay? These guys got to do stuff. I know they got to do stuff. And I'm going to do stuff when they do stuff. At some point, they're going to have to sell. It's going to be that simple. When you start, come Q1, January, when you come for Q4 earnings, and we start to see those earnings compress, Michael Burry will get his crash then, but not till January, okay? When those earnings start to come down, when Christmas disappoints in the retail sector, or you've got a second thing that could happen there. And it is that these guys, okay, these retail companies have double, triple, quadruple ordered stuff, okay? They are sitting on top of either massive inventories or massive orders that are going to be inventories, okay? If those inventories start to show up in January is the slowest retail month of the year. If they're sitting on top of those retail inventories in January, Kathy Wood will get her deflationary recession if that happens, okay? And it will be nasty. Now, it'll be fast, though. It'll only be like 3 months, and they'll deal with the inventories, and we'll be back to normal. But at the same time, it will be nasty, because it'll be fast and furious. You will just see a dump. And that's what happens. That's when you get a crash, right? Is when somebody's sitting on top of an asset that they can't hold, okay? If you're sitting on top of If you're Walmart sitting on top of a summer inventory of summer clothing or swimming pools or floaty things, right? You've got to get rid of it, and so they'll liquidate those inventories because they need the cash back for next summer and for next fall and for next Christmas. Okay, so all of that being said, you've got really a nice mess going into this. Like we talked about yesterday, looking for that rally up, 18-month moving average. Oh, please let that happen, please. And and again, totally prepared to be wrong. But that's really kind of what I'm excited about. I'm hopeful about, and I can't wait to share this with you. Even if it's wrong, I can't wait to share how it went with you, because there's been a lot of work, a lot of education, a lot of stuff has gone into figuring out this particular trade setup, and to see where it breaks and doesn't work, man, that would be cool too. Like to have a catalog of where this thing falls apart. I got that 2 weeks ago with my straddle, my straddle strategy, and that has led to the concept of the infinite trade, which I think is going to be also very, very big. Anyway, as far as everything else is concerned, I'd like to thank you guys all for watching. Do me a favor, hit that like and subscribe button. That really helps the channel out. The Russell Journal is written, edited, and hosted by me, Russel Liss. We are produced by Social Media Shows. Our executive producer is Maria Pureza. Thank you, Maria, for all your help. And until tomorrow, pretend I said some sort of catchphrase.